Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A reactionary bearish engulfing pattern yesterday after the market tested, for a third day, up to the resistance of the December 2002 low at 98.55, breaching it, as well as the coincident lower time, currently at 84, also around about the 98.49 level, of the big old broken January to May 2021 bearish Andrews pitchfork, but failing to stay over it and subsequently crashing back down. Interestingly, if we take the last three sessions together, then we have a 3-day bearish evening star pattern. This move lower halted, to my mind, a little too early, as below we have the previously highlighted widespread and somewhat diaphanous congestion zone between 97.22 and 96.20, with a smaller zone below that between 95.23 and 95.40. This seemed a suitable area to slow, if not halt, but the half number of 97.5 seemed to preempt that. Looking at that support below, key elements are the October 2002 low at 96.85 and the August 2022 low at 96.20. Overall, the market continues to move down within the late June to mid-August bearish shift pitchfork, in between the middle time below, currently at 96.07, and the upper time above, currently 99.05. This pitchfork is an offshoot lower from the earlier big old January to May 2021 bearish Andrews pitchfork. Now, just above the upper time of this newer offshoot bearish shift pitchfork, we have the closely allied declining short-medium moving average, currently at 99.37. Then also the nearby 61.8% absolute Fibonacci line at 99.15 and the February to date downtrend, currently at 99.66. So far today, a reactionary move back up, a small one, and not before testing down to the 97.5 area once again and looking like an indecisive spinning top, maybe even a doji cross right now. Cable, aka sterling against the US dollar. Second bearish black crow yesterday and a follow-on lower from the stalled upward move earlier this week. The market originally stalled at the combination of the upper time, currently 113.38, of the mid-September to early October bearish shift pitchfork, plus the March 2020 low at 114.02 and the October 2016 flash crash low at 114.5, along with the light congestion area from March 2020 between 114.5 and 118. Meanwhile, we seemingly have nothing much really until the declining middle time, currently at 110.91 of the broken May to July bearish shift pitchfork, and that at best is a limited support, if at all. Now, so far today, not that much. It looked like initially some sort of apparent indecision around yesterday's close, but we're now heading lower and we're just touching down to the short moving average at 111.64, which isn't necessarily that great an area of support or resistance at the moment. Euro sterling, a third bullish white soldier yesterday, if only just, but more like an indecisive spinning top. It seems the market has no problems in breaching the recent overhead cap of the April 2021 high at 87.19, but real problems in trying to close over it. The base of yesterday's action was the April 2020 low at 86.69. Looking above, we have some recent congestion from early October between about 87.69 to 87.80, and then nothing until the 50% Fibonacci line of the March 20 to March 2022 move at 88.51. Overall, we continue to remain within the same previously mentioned bullish April to August Andrews pitchfork, in between the lower time below, which is currently 86.03, and the middle time above, currently 88.72. Now, so far today, an early attempt higher over the April 21 high and making a new high for this week, but seemingly cautiously and carefully, still short of the congestion between 87.69 and 87.80 and currently holding around the 87.57 short moving average. US dollar against the Indian rupee. A bullish opening long white Mariposa yesterday, making a new all-time high and following on handsomely from the previous session's immediate countering bullish piercing line pattern. Compared to recent days, this is quite a decisive move and changes the dynamics, the patterns and their targets from previous commentaries. The recent rudimentary bull channel come ascending wedge pattern and any targets that may be generated are no more. They are retired. We now have what looks like a September to date ascending expanding wedge pattern, currently 82.12 to 83.88. Looking above, the next immediate potential resistance is the 50% projected Fibonacci line at 83.66. Meanwhile below, well, last week and early this week, we've seen construction of a new small congestion zone between about 82.20 and 82.42. Finally, we are set up for a possible weekly key reversal this week. We have on Friday either a close above 82.83 or under 82.30, under 82.33, above 82.83 and under 82.33, then we'd be on. Anything in between would have a lesser outside week, and at the moment we are looking just, if only just, as a weekly key reversal up. Maybe. I think it's all over the place at the moment. Could be an outside week, but there's still plenty of time to go. So far today, initial attempt higher, making another all-time high, but prices have since dropped back, and we're actually looking at a possible spike or shooting star pattern on today's action at the moment. US dollar against the Brazilian real. A reactionary bullish Harami and bullish opening white Marobozo yesterday. Interestingly, though the market punched up through the 50% Fibonacci line at 527.37 of the May 20 to April 22 move, it fell to close over it. The base of the action was the 50% Fibonacci line of the March 2021 to April 2022 move at 522.76, the same as late last week. However, I suspect the real heavy forces in this move back up are what is at this moment just below this 50% Fibonacci line. They are the rising medium moving average, currently 521.71, and the rising lower time of the late May, late August bullish shift pitchfork in between the lower time below, currently at 518.79. This bullish pitchfork is the current key driver here right now. Now, one other thing to note, and something I've mentioned before, we had a false golden cross, a brass cross if you will, on Friday last week of the medium moving average over the short medium moving average, currently 519.92. US dollar against the Mexican peso. A second bullish white soldier yesterday and a follow-on higher from the previous session's immediate countering bullish Harami. This may not be the end of the recent intraday indecision, but it is a start. The market punched up through both the short medium moving average, currently 20.0351, and the rising medium moving average, currently 20.1603, but only managed to close over the former. A little above the medium moving average, you have the very gently sloping lower long moving average, currently 20.2176. So looking below, we still have the broken upper tine, currently at 19.9055 of the March to July bearish Andrews pitchfork. This bearish broken Andrews pitchfork, it is mainly redundant, has been overtaken by the bearish shift pitchfork for the same move, especially the middle tine a little further below, and that's currently at 19.8398. Yet I suspect it may still be significant. You see, the reason I've taken pains to highlight these two tines these last few weeks is that in about a week and a bit they will cross over, and for those who know me well, that is when I say look out for one or more of the following: a change in trend, a reinforcement of an existing trend, and or volatility. These usually lag the crossover by a session or two, but it is worth watching out for what happens on or around the 28th of October. You can see the crossover within the red circle on my daily chart. In the bigger picture, the market has been base building since mid-August, between roughly 1990 and about 2020, with occasional forays outside. This is still the picture with no significant feature developing in either direction, or at least that is what I'd normally say. However, I'm starting to look at the action since August as possibly having elements of a rounded bottom, which includes that rising bump from 3 weeks ago, even if altogether it is not such a great looking pattern. Now, so far today, another attempt higher, up to just short of the medium moving average and failing there, and dropping back down to look like a possible shooting star pattern, or maybe even a gravestone doji. Thank you for listening to Short Version Broadcast, gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.